Welcome to the Investing Podcast, presented by Tusk Media. Now, for your early morning look at financial news and activity in audio and video form, here's the Morning Market Mimosa.
Hey everybody, welcome back to the Investing Podcast. It is Thursday, August 25th, 2016. That's the hardest part of the whole show, is getting the date right, especially in the morning one. Not that sharp. It's a little bit challenging. Got my liquid grit here, so we're going to
been up early though today.
Early morning. We've got brisket smoking out there. Follow us on Twitter at Tusk Media LLC. We're going to live updates on our brisket. Ben Nye here, as always in the morning. Ben, how you doing, man?
I'm doing well. I'm still feeling good after we had a little bit of Narwhal tennis tournament, and Sam and I took home the gold.
Yeah,
yesterday.
We've got some tennis players in the office. I'm not one of them. What I'm rooting for, and we talked about this earlier, I'm really rooting for some serious feuding to stem out of this. I want these tennis matches, you, Krebsbach, Sam, intern Garrett went, I really want y'all to have ill will towards each other. I want feelings to spill over.
You look at Garrett's face, you can't see him on camera, but he's just crestfallen right now.
It's unbelievable. He seemed down, and then I remembered, he wouldn't play tennis, but now we know why.
Yeah.
So you're riding pretty high.
I'm feeling good.
And we got a fun day on tap. We've started smoking meat around here a lot. We mentioned that already. We got brisket coming. We're playing poker tonight.
Yeah.
So another chance to really hurt some feelings and really punish some people that we work with. It's going to be a great time. Office only. Sorry, no open invites, but we'll probably do some live coverage of that on the Twitter feed as well. So big poker tournament. Because of that, we're not going to have an afternoon podcast. We're not going to do the Investing Podcast live today. We're actually going to do something tomorrow, which we'll tell you more about. But let's go ahead and jump in. Futures. Down a little bit. Dow futures down 18 basis points. S&P futures down 20, so about a fifth of 1%. NASDAQ futures also down 18, just like the Dow. Gold down about a third of a percent. Oil down a little more than half of a percent. Obviously, we got a lot going on. We've been talking all week about Jackson Hole. We've been talking all week about Fed, rate hikes, all that good stuff. But let's start with some data that we just got. Ben, what you seeing?
Yeah, so data came out 8:30 Eastern time. Pretty big data because it feeds into the GDP number that they're going to continue to update for the third quarter. This is July data, durable goods orders, and the way they break it out is all durable goods orders up 4.4%. Street was looking for up 3.4%.
Wow.
And then durables ex transportation, you're still talking up 1.5%. Estimate was up just 0.4%.
Wow.
So this is good data.
Very good.
And the Fed's watching it closely, watching it like as a hawk. You might say.
I see what you did there. Yeah, it's good data, and I think you point to the Kansas City Fed president, Esther George, made the comment. She said, when I look at where we are in the job market, and when I look at the inflation and our forecast for that, I think it's time to move. So she thinks the rate hike's coming. That's a big headline this morning. Obviously, we're looking forward to seeing what happens tomorrow. Ben, we talked about this a little bit in the pre-production meeting, but what's your gut? Are we going to see a rate hike? What's the street thinking? What are the odds? All that kind of stuff.
Yeah, so right now, there's a function on Bloomberg called the work function. Everyone's watching this. It uses basically futures of treasuries to predict the likelihood that the Fed will hike. And right now we're sitting at just 28% for September and just 54% by the end of the year. So in my opinion, that is low, relatively low, given what people are talking about and given the data that we're seeing.
Yeah.
So there might be an opportunity for a differentiated viewpoint at this point in time.
Yeah, I think in some ways, we were just talking about this. In some ways, I kind of feel like we might actually get a rate hike tomorrow. But that's almost just a relative shift in my thinking, in which I've probably taken a little bit of a move sentiment-wise and personal view-wise. But just contrasted that, for the longest time, I felt like no rate hike's coming. There's not one coming, there's not one coming, there's not one coming. They keep talking about it. So for the first time since the last one, I actually feel like, we might actually get one. So that almost skews me and makes me think, because of the recent activity and non-action, almost makes me think, it's going to happen. The reality, I think you put it kind of pretty well there. I think there's a much higher than 28% chance that we get one tomorrow. Do I want to say it's more than 50? I'm not quite sure that I'm there. But it's definitely something we're going to keep an eye on.
Well, and it's interesting because I believe it's just Yellen talking tomorrow at Jackson Hole, but she has such a bearing, and this Jackson Hole conference has such a bearing on what the Fed does that we'll effectively know. I mean, is she setting up for the rate hike at the next meeting, or is she not? And you know, we'll see everyone's articles on it. We'll see Hills and Rath's take on it. And that'll, you know, it's not going to deviate too much. Obviously, we get a jobs report for August. But beyond that, it's not going to change too much relative to what she says tomorrow.
Yeah, and I think once we hear what she says, you guys are going to get to hear what we say, which is going to be pretty fun. So tomorrow, probably around 10:15 or so, we're going to start reacting to the commentary from Janet Yellen, because she's speaking at 10, I think.
She's speaking at
10 o'clock tomorrow. So right after that, we're going to come here and we're going to do it live. It's going to be on Twitter. It's going to be on Facebook Live. So check it out, twitter.com/TuskMediaLLC, facebook.com/TuskMediaLLC. Ben will be there. I'll be there. We're going to bring in Sam Frost, Matthew Krebsbach, maybe get intern Garrett up here, maybe get John Holt, the guy that's in the compliance cave that we never bring out here. We might even trot him out.
Yeah.
And we can all kind of react, because like you're saying, is this going to be the actual, you know, hike? Do we finally get the clues that say, hey, this is actually happening? I think we'll know whether it is or isn't, you know, once we hear from her.
Right.
So certainly something to keep an eye on. A couple individual names, HP and Mylan. You want to jump in with HP?
Yeah, you know, so HP obviously spun off its enterprise business, so it leaves just essentially the PC business and the printing business, and that's the division that reported last night. You know, they just can't get it together. I mean, they're working in the PC and printer space. What got me was operating margins in PCs. Do you have a ballpark guess on that?
I don't even want to guess, but it just can't be large.
4% operating margin. So that's before they pay interest. That's before they pay tax.
So the low single-digit operating margin.
That's what we call operating. I mean, they moved that to 5%. Like they're making cash.
Yeah. Man, that's tough. That's tough to deal with.
They're living on a shoestring. Printing margins is where they make the money. It's 14% operating margins. Smaller part of revenue, but by far the vast majority of the operating margin. They actually beat in the quarter, but their guidance was lower than the street, so they're trading quite a bit lower. I think down 6% or so when I last checked.
Wow. So lots going on. What else you got?
For Mylan, you know, this whole space has just been really punished. You know, they've been putting through price increases. The crazy thing to me is that these companies are still able to create monopolies, even though the actual active ingredient has been around. In this case, epinephrine has been around for over 100 years. So the story with Mylan is that New York Times and now all the political pundits are getting onto the fact that they've been pushing up EpiPen prices, and the reason they're able to do that is because they have no competition. It's basically a government-sanctioned monopoly. And the crazy thing is, the patent is not on epinephrine itself. The patent
is it on the delivery?
Not even on the delivery. It is on the safety cap on the needle. So you're paying $700 for an EpiPen
for a safety cap.
For a safty cap. So it's incredible to me, like what these guys are doing.
We got to invent some safety caps.
Right. Maybe we'll do some more studies on this. But this is it's a pretty incredible world, this pharmaceutical space, and they're able to generate very high, like 90% gross margins on these products because of it.
Yeah. So, man, I didn't realize that was a safety cap. My mind is reeling so much right now.
So they're in the crosshairs of the government, and you know, it's just kind of one after another. I mean, we saw it with Valiant, we saw it with Mylan, we've seen it with some other companies as well.
And that's the thing that's interesting in some ways, and this is certainly not unique to pharmaceutical companies or the healthcare space in general, or really any particular sector or niche of the business world. But what's wild to me is almost, you know, hey, you get in the crosshairs of the government, you kind of look back and you look at the history of all this, and it's like, well, the government's been propping them up all along. Like,
exactly.
Now all of a sudden enough is enough,
right.
But at the same time, like, as you just mentioned, for the last 100 years,
right,
this drug has been around.
And now, you know, we got people with investments in Mylan who are actually counting on this. You know, mutual funds own the company. They're counting on the dividend.
Yeah.
And now what's happening? So
yeah, it's kind of a wild scenario because you get such a huge swing from a moat that's constructed basically by government protection,
right?
And then all of a sudden, not only is the moat gone, but we're actually just going to flood the moat.
Yeah,
you're going to drown.
Right.
And that switch gets hit, and it's tough to come back from. I think that's all we got for now. We're going to be back in just a little while. We are going to do the lunch podcast, myself and the Frost Man. Sam's going to come on out, and we're going to have a good time with it. Y'all have a great day.
Tusk Media is a subsidiary of Narwhal Capital Management. Ratings and reviews of Tusk Media content are not to be construed as endorsements of opinions, analysis, or services offered by Tusk or its parent company. The opinions and predictions shared here are professional beliefs at the time of publication. We are not under duress from any of the corporate entities mentioned. This is not a solicitation to take any particular action. Although we are investment advisors, this information should not be considered investment, legal, or tax advice. We strive to be as impartial, insightful, and accurate as possible. We base our opinions, analysis, and calculations on information we believe to be reliable, but we cannot guarantee its accuracy. We can, however, guarantee that our opinions will sometimes be flat out wrong due to a variety of factors. Employees and clients of Narwhal Capital Management may or may not hold positions in the securities detailed and may or may not hold these positions in the future. A full list of all securities purchased, sold, or held during the 12 months preceding the date of this publication can be provided upon request. Unless otherwise noted, all data accessed via MarketWatch or the Bloomberg terminal. Past performance does not guarantee future results. A copy of Narwhal's Form ADV is available at the SEC's website, www.advisorinfo.sec.gov, or from Narwhal upon written request.